Good morning, traders. Today is Wednesday, July 27th. My name is Charles, and this is the Pirate Traders live stream. All right, well, what are we looking at here today in the market? Yesterday, we had a bit of a sell-off to the downside. It was a rotational day, but it really traded much like a trend day, pulling the market lower, creating a node of volume and pulling the market lower. That is bearish, as it is a sign of momentum to the downside. But then we open up the charts this morning, and what do we find? A gap up. We are opening above yesterday's high. So that is a bit interesting to see. We have momentum to the downside, yet we're gapping up, which is a signal of momentum to the upside. So that, in my mind, increases the odds of chop, right? Uncertainty on both sides of the market. So I think the gap fill today is a very high probability opportunity. That is, once the market opens, it trades back down to yesterday's high. And then we look for support at yesterday's high, 39.55. Does the market find support there? If the market does find support around yesterday's high, that is what we call a gap and go, which is the most bullish scenario. So we would then look for continuation to test the overnight high. If we get through there, to then test the week reference at 39.77 we left behind a couple days ago. So that is, if we pull down, fill the gap, and find support, we will be looking for a move higher. Also, if the market opens and we don't fill the gap, if we only pull down a little bit and turn around and start heading higher, both of those are what we call gap and goes, and that is the most bullish scenario. So you want to be long and monitoring for continuation higher. If the market pulls back down to yesterday's high and it does not find support there, then that just isn't a gap and go. So that takes away any sort of bullish sentiment that you may have had. And so then we'd be looking for the market to pull back down into yesterday's range, looking for support. Okay. I wouldn't necessarily think we have to trade off all the way down to the lows right away. So I would be just kind of testing each support on the way down. Does that hold for a rotation back up? If not, the next one. If not, the next one, so on and so forth. Okay. The highest probability this morning is probably chop. All right. The market is open. We do have a gap up, so the gap fill is in play. The way to trade a gap fill, now that the market has pushed above the opening price, one way you could trade it is you put your short at the opening price, and when the market passes back through it, you put your stop above whatever the high is. Today, that's not a very good risk-reward play, but it's just worth mentioning. Oh, yeah. What was I saying about the FOMC? So because the FOMC meeting is happening this afternoon, or the notes are being released from the meeting this afternoon, the markets will probably be kind of boring and rotational this morning. So we're expecting the gap presents us with an opportunity for the market to instantly make a move a certain direction. But that's why I say the gap fill is pretty high probability, because I think we're probably just going to rotate around, waiting until 2 p.m. to make any larger move. But I could be wrong, in which case I'll say so. If I see something, I'll say something. So first order of business, can they fill the gap? Getting back down to 39.55. Fighter pilot overnight was 95% long. Great note. Overnight inventory is net long, increasing the odds of a counter auction to the downside, further increasing the odds of a gap fill. All right, so that is the gap filled. So now the question is, do new buyers start to step in here? Do we get support around yesterday's high? If not, it's not necessarily bearish, but it's just not bullish, right? If we got support, it would be bullish. If we don't, it's neutral. Yeah, those ticks are opening up very, very net long. Okay, testing yesterday's high once again. Does not feel like it's going to hold, but we'll wait and see. All right, folks, support. We have a gap and go. That is bullish. So the next target to the upside is testing the overnight high at 39.69. I remain bullish as long as we remain above yesterday's high. Michael, would the A period low be considered poor because it's one tick from yesterday's high? It would be considered weak, not poor, but yes. All right, testing the support at halfback right as we get back to the zero line. This should tell us, do we have buyers to continue to push the market higher? If so, they'll keep the market above that zero line. Screwball NQ looks more bullish. Well, the ES looks bullish. I mean, I guess they both look bullish. This is a gap and go right now. That's as bullish as it gets. All right, so there's the test of the overnight high. So can they keep the momentum going? Can they bring in new buyers up here? If so, we're looking to continue up and repair the weak reference left behind 2 days ago at 39.7750. Monitoring for continuation higher from there. So yes, sir. NQ is above the overnight high. That is bullish. Look for support at the halfback, 12.325 for continuation of the momentum to the upside. All right, folks. Well, it looks like we're setting ourselves up for what one might describe as a slow melt higher. Essentially, a market that is not, super aggressive, super bullish to try to, push the market higher very, very quickly. But it does have the momentum. We do have a gap and go. We did push above the overnight high, pull back down into support and find buyers. So we are getting momentum to the upside. It's just not a lot. So I'm looking for a potential very slow grind up to that 39.7750 level. A lot of resistance to work through on the way. Zoo, the overnight F, G, H, and J period were all weak at 53.50. We get a couple points away from them, but didn't repair. Do overnight references not matter? That is correct. Overnight weak references in the overnight do not matter to the regular trading hours market. We're just significantly bigger and more powerful. There's so much more money trading during regular trading hours, and so much more like institutional money. So all that really matters to regular trading hours is what happens in regular trading hours. The only references that I really pay attention to are overnight highs and overnight lows. And then, as I always talk about, the inventory at the moment the market opens was the overnight inventory net long or net short. But once you get 20 minutes into the day, that doesn't matter anymore. And you're really only looking at the overnight high and the overnight low. Rocket says, right on the weekly open, classic FOMC play. What's the play? Come back to the weekly open for the FOMC? J Trader. Globalist gets no respect. Nope, not when the giant 300-pound gorilla walks in the room. At that point, nothing else matters. ZD, today is the FOMC meeting, right? The notes from the meeting, yes, releasing today at 2 p.m. And we will be here live. By the way, if any of you freeloaders who are not members of the brigade want to come back and hang out at 2 p.m., we'll be here to watch the market go crazy together. No notes, it's a rates day? Well, I really got to learn the difference between these FOMC things. Is Papa Powell still speaking? That's really all that matters. The algorithms will kick in at 2 p.m. when the interest rates come out, and then the market goes nuts as Papa Powell talks at 2:30. Rocket says, that was my full out target. Getting back to the weekly open. From where? Do you start a couple days beforehand, or do you wait till the morning of the market open and then assume it's heading towards the weekly opening price? All right, so as we build up this big node of volume right here around 69, we ask ourselves, is it buyers building up steam for continuation to the upside, or is it sellers piling on to take the market lower? Well, we click over and we look at our ticks. We see the movement of the ticks is moving down, so it's sellers trying to push the market lower. But the fact that we're still above the zero line is a sign there are still more buyers than sellers. So right now, it looks like it's building momentum for continuation to the upside. Keeping an eye on those ticks. If they break the zero line, we're going to have a pullback. All right, support at the zero line is bullish. Can they hold it? Can they do it? All right, first support seems to be breaking. If the support here at 65 breaks, we're looking for it at 62, the halfback. All right, previous support becoming resistance. That's a little bearish. Little bit of a need for a pullback, you know. Give the buyers a chance to get in. Screwball tempo is slowing. Maybe it was the move till FOMC. No, I'm still of the opinion that it is bullish because of the gap and go. So the target remains repairing this weak reference. This might be all we get. I could see us running out of steam there and then going rotational. But you don't get the momentum of a gap and go and then go nowhere. It's just going to be a slow melt higher. All right, pushing up into some resistance, looking for a pullback down to support. Screwball, big sell on the market was there. Yeah, but remember, big orders, big sell orders are not bearish unless they push the market below the zero line on the ticks. Because just because somebody, had a big short order there, it doesn't mean they were going short. They may have been taking profits on a long trade. So things only get bearish below that zero line. Matthew, poor high? Nope. Good high on both indices. Okay, looking for support at the halfback. 39.6350. If we're going to get support, they should be able to keep those ticks above the zero line. Jeremy, the advancers versus decliners are falling. How do we interpret that? It's bearish. So if we want the market to continue to trend higher, we do want it to make a wick and start to roll over to the upside at some point here. But remember, that's just one signal. You've got the ticks holding above the zero line and the breadth trending higher. You got a gap and go in price. You got lots and lots of bullish signals and only one bearish. I will just say this is twice now that this node around 69 has become resistance once we push through it to the downside. That is not bearish, but it's just not bullish. The bullish thing to do is once we pushed above it, we should have turned it into support. Come on, bulls. Pump it. Alex N says, press like. It's a great point. We got 172 people hanging out. Only 67 of you like me. So basically we got a chat full of haters just over here hating, not participating. Smash that like. Come on. You know you want to. Seven Mile Reach says, anyone fading this? I wouldn't. I would wait until we got back down into yesterday's range to look for a short. A gap and go is no joke, folk. It's a sign of momentum. No reason to fight momentum. They see him trading, they hating, trying to catch him trading dirty. I suppose the only real dirty trading is insider trading. Otherwise, it's kind of all fair in love and war. It's a buyer versus seller. One of them's always right and one of them's always wrong. Elliot, can you even inside trade futures? Oh, yeah, of course. All right, testing this resistance once again. Do we have enough buyers to poke through this time? If not, at the very least, can we turn this node at 69 into support? Elliot, but isn't that the point of them? As in, I know the price of a lean hog is going to go down. Better hedge. If you're a hog farmer, yes. So if you're a hog farmer and you think the prices of hogs are going to go down, you want to sell some puts. Buy some puts or short, the market, the futures, so that you can make the extra money back that you will make on your losses in pigs. That's the original purpose of the futures market. But nowadays, it's just for speculation. Most of the money that moves through the market moves through the futures. John Q, could be one of those days where the market grinds up and then news breaks and it reverses entirely in one bar. Oh, I can do you much better. I can tell you at what point that news will break. I can literally tell you to watch the clock for it. Come 2 p.m., this market could completely retrace the range in a matter of seconds and then retrace it right back up. This is not could be one of those days. This is for sure one of those days. Johnny, what's the best case scenario in the meeting today and a likely scenario? How will they affect price? Boy, you're asking a question that is way too complex for little old me to answer. Of course, what is the right thing to do? That's completely up to people's opinion. There are people that think that they need to raise a full percentage point. Of course, they know that will hurt the economy, likely push us into a recession. But there are those that think that's a good thing, that a short-term recession will cause, the slowdown of buying enough that we can stop inflation, right? We can reverse inflation. So some people would say raising by a full point would be a good thing, even though it'll be bad for the economy on the short term. And then there are those who say the opposite. They say we need to stop raising rates or raise only 50 basis points or whatever because, we're going to crash the economy and that would be bad. I mean, everybody's got their own opinion of what is a good or bad decision, which the Fed could make. So that in the very beginning makes it complex, right? It's hard to guess how the market will react to anything because everyone's got a different opinion. And then it gets even crazier when you recognize that human beings are very random in our decision making. We make decisions based on emotions more so than logic. So even if you've got one person that thinks they should, raise a point and one person that thinks they should raise 50 basis points, they might both go long no matter what decision is made, or they might both go short no matter what decision is made. Their reaction to the news is random as well. So, when it comes to things like, I know there are people that do that for a living who are experts in preparing for these type of moments for FOMC, or, if a big company like Google is doing earnings or whatever, right? I know there are people who are fundamental traders who are professionals at that. That is where they are experts, but that is not my expertise. Instead, I just like to wait and see what happens once the news comes out and then look for asymmetric opportunities within that. So if, for example, the FOMC notes come out and the market makes a huge rip one direction and it finds some support and it turns around and starts heading up, well, I'd be willing to go long there because I have noticed a pattern that the market often has a big push one way when the news first comes out, and then it reverses and heads another direction. So I'd be willing to go long there, even though I have no clue whether it's going to reverse and go back up or it's just going to bounce and head lower. I have no idea. But I'll take a long trade because I can get in with very little risk. I can put my stop right below the current low and then kind of like, it's a bet. You know what I mean? It's a gamble. But it's a gamble with very limited risk. Maybe it works out, maybe it doesn't. And on an FOMC day, man, if it works out, it can really work out. So that's essentially the way I trade news events like this, is I just wait and see what happens and then look for very, very safe, low risk opportunities to try to take a gamble on the results. It gets even more fun. So that's 2:00 when the notes come out and the market is reacting to the decision that's made. It gets even more interesting once the Fed chairman starts talking, because then the market's not even reacting to fundamentals anymore. They're reacting to like his mood, his tone, his facial expression. Does he seem like he's lying? Does he seem like he's like, dude, the reactions are totally random. There's no way to predict it. All right, testing this resistance again. How many buyers is it going to take to poke through? All right, everyone. Well, as we print the C period here, we are still pushing into this freaking resistance at 72. Somebody loves to sell this price. So we're looking to break through that. If we can get above that B period high, I would look for a little pop, a little bit of short covering, as there has been a lot of sellers piling on in here. So once you get that pop, you look for the market pretty much just to stay above the B period low, because that would be the beginning of one time framing higher. The target to the upside is 39.7750, looking for a repair, so looking for the market to push a few points through there. I don't yet know if we will have the momentum for continuation beyond that point. We may just go rotational there and then kind of trade inside Thursday's range, you know. I could easily see us repairing that and then just kind of going sideways till 2 p.m. But I would say as long as we continue this momentum to the upside, that target is very reasonable to at least get there. So watch the ticks. Do they stay above the zero line? Watch support. Do new buyers step in when we come back to support? Until we can finally poke through the 73 level. Thank you all so very much. Have a good rest of your day. Like I said, we'll be back here at 2 p.m. So come on back and hang out with us once again. If you have not pushed the like button, feel free to do so on your way out the door. And if you are in the brigade, let's ride.